All right. Welcome to this week's crypto market update. Happy Thursday. Happy crypto Valentine's Day and all that fun stuff.
Happy
Uh,
end of Bitcoin day. We'll title this day Jamie Dimon Day.
yeah, Bank coin.
Bank
The bank
coin. There we go. Centralized private coins.
So as far as Bitcoin price action is concerned, still not a heck of a lot. As far as like horizontals are concerned, it's still very much within this range. Little tiny.
Rocky, your prediction from last week was pretty far off. I think you were shooting for 3,500.
I know. I was off by about $100.
You're like the Twitter trolls complaining about buying on the way down, not understanding we're in a bear market.
Yeah. So one interesting thing that have noticed, so and this is something I actually pointed out in 2015 when I noticed this. It's like when we made a leg down in 2015, and I mean like diagonal lines, they break all the time, right? But when it made a new level down into capitulation, it kind of eventually broke out of this and then did a lot of sideways, established a very clear range. We haven't really done a ton of sideways since we made this new level, but
Yeah.
we could be at a similar point if we did do some more sideways from here for the next
Yep.
several months. I don't, we're not seeing a ton of momentum in either direction. Generally speaking, since a lot of alts are oversold and have dumped a lot as well, usually when Bitcoin is a little bit stable or boring, sometimes alts can take off, but they really haven't really taken off either. They've also just been chopping around. I mean, Bitcoin will make a little move, and like when it made this move last week or whenever it was, I think it was last week. Everyone was like celebrating, and it was like pure euphoria again on social media and all that fun stuff. And it was tiny, just small little candle, right? I mean, it is nice that it held up instead of just bleeding out, but it's still technically a lower high right now.
Yeah, Rock, if you go down to an hourly chart too, one thing I noticed is, kind of in line with the Bart Simpson price action theme, it's like we get one spike either to the upside or to the downside, and then anywhere from like 2 to 5 days of kind of spiky priceways action or
Yeah.
sideways action, and then another extension. Um, so, if you look at kind of that last red volume spike
Right here.
on the 13th yesterday, yeah, on the hourly, yeah, right there.
Yeah.
Um, one thing that's kind of interesting is that we're holding above kind of this intraday price action range. So right around 3,600, there's support.
Yeah.
But so again, that's like the short term intraday price action, right? But the longer term trend and the bigger picture is still down because we're holding those lower highs. So this is just case in point of like price action example of where I don't really pay attention too much to the intraday, other than looking at like volume spikes and seeing, if we get a shift in momentum. But really, I mean, I'm just more focused on the daily.
Yeah, absolutely. Same here. I mean, there's probably still a lot of people doing the leverage game, trying to, trade this chop. And if someone's got a system, an algo, and that's working for them, then hallelujah.
Yeah.
For myself, I just don't really spend a lot of time trading this because for me on the larger time frame, it just seems very flat.
Yeah.
Um, so. And at this point, it's kind of like after such a long period of waiting, and one doesn't know how much longer we'll have to wait before a new cycle starts. I'm not really eager to start selling bags on small moves or whatnot. So even if Tezos or something went up to like a couple of dollars or whatnot, I'm not taking any profit. Like my first take profit, which kind of sounds crazy, but I've just got longer term goals with that. My first price target with that is $10 before I take something off the table. That's just me. Obviously, everyone's got to adjust that for themselves. And obviously, one can trade more of the waves. If you're in profit and you want to take some off the table or take out risk capital and all that stuff, everyone's got different goals. For myself, I don't really need the money from crypto right now, so I can wait until it actually becomes something really substantial on this next cycle. And also just for myself is taking away some knowledge and experience, because every time you go through a market cycle, so having gone from cycle to cycle in crypto, there's a few valuable lessons that I learned, such as there's a lot of projects that if one just held, now it's easier said than done, of course, but if one just held certain projects from 2015, such as Ethereum, Ripple, so on and so forth, into peak parabola, then that could be an obscene amount of money for very, very little fretting, really. But I'm a big fan of just like scaling out and selling incrementally along the way, because no one knows where the top's going to be. Looks easy in hindsight, but when you're all the way up here and alts dropped with Bitcoin, this kind of looked like a good take profit, and we were taking profit on stuff here.
Hey, Rocky, what is your chart showing right now? I'm still seeing the 60-minute on the BTC.
Yeah, I think it's still seeing the 60-minute. Huh? I'm on the daily right now. One sec.
Yeah, might want to refresh.
Okay, let's see. Could be some lag. How's that?
Nope, still frozen. Why don't you turn off screen sharing and maybe turn it back on, see if that helps.
All right, how's that?
Yep, got it.
All right, I guess we had a little bit of lag. So that's just kind of my thoughts with Bitcoin as a whole.
Yeah, same with me. I mean, based on the probabilities, possibilities, and plan, that would basically say no change from the past 3 weeks. And for me, just kind of looking at those areas, I still have those same alerts, those same price alerts, and neither of them have been triggered. One's around like 3750 and one's around 3300. And as long as we chop around that range, the best action for me is no action.
Yeah, for sure. Now, in the short term, if we did eventually get a bounce into this area, I think for anyone who's happens to be in some trades, I think this is definitely a good take profit zone as far as like a short term goal, because that would be like prior support turn resistance. We haven't tested that yet. We'll see if we do or not.
Oh yeah, lots of bag holders would sell into that if it could even make it up that high.
Yeah, exactly. Even for myself, like unless my bags start doing cartwheels at that area, I'm probably just gonna hold until we start climbing up again with the higher lows, and then I've got my price targets where I'll incrementally take profit along the way. But the interesting thing is like out of all the crypto that I have, Tesla's the only one that's just making passive XTZ for me right now just by holding it. So that's why it's one of my largest alt positions anyways. Aside from Bitcoin, Bitcoin's still always my largest. One interesting thing, BTT, going back to BTT. So let's just follow up on that from last week because we talked about that. The volume's still okay, although that's probably about half the volume that we saw last week. I'm not trading this, but I'll still share my thoughts on it for anyone who is. So last week I talked about how, if one were to take a stab here, that it'd probably be a good idea to cut it if it broke this line, if it dropped below this immediate support. From that immediate support, it had dropped on the Bitcoin charts probably about 21%. But it seems like right now, though, it might actually, it's a possibility, might actually be forming a larger triangle, larger consolidation. Right now, it kind of looks like a bit of a symmetrical triangle. If it came up and retests as an ascending triangle after about a month of consolidation, then of course it could be getting primed for another leg up. And the only reason I'm kind of looking at this or giving this attention is because it's Binance's latest darling right now, right? So we do know that Binance they do like to move their coins around, whether them or their market movers or whatnot. But if I were in a trade like this, I'd probably, take some profit at 60 Satoshis or whatnot. And then like, let's say even if I were to take a stab as a dip buyer, if I were to take a stab on this line, I would just cut if it snapped below. It'd be very simple. I think if it's gonna consolidate and hold up and pop, I think it'll start to climb up from here. And if it doesn't, I think it'll quickly start to just bleed out, maybe do the full retrace that a lot of coins like to do. And just because a coin starts to produce a consolidation pattern doesn't necessarily mean that it's going to work. So for example, here's one example of a pattern that didn't work. There was Stellar, and for a long time, it was creating like this on the BTC charts anyways, it was creating like this really large kind of symmetrical type triangle like formation. Looked like it was consolidating, and then it just kind of snapped below this immediate trend line and just start to fizzle and bleed out. And now it's probably just going to do a full retrace. This does not look like, because this is like a slow grind to me. So this does not look like something I would just dive into for a bounce play or anything, because it's just slowly bleeding out. Sellers just selling a little bit each day. So oftentimes with alts, especially after an alt does a big move. Now this took a lot longer than a lot of alts to start bleeding out like that, but especially after an altcoin pops a big move like that, more often than not, they'll just do a full retrace. And so I don't necessarily want to get in the way there, but if it did a full retrace, then there would be a nice classic buy zone for Stellar.
Yeah, I agree with you too about BTT, Rock. It's one of those things where it's like you have the initial like hype, right?
Yeah.
The listing, you get Binance that pushes behind it. And then once you have kind of that price structure established, it either follows through or it doesn't, right? It's like very, very simple. So it either the price structure stays intact and you do extensions and then you go, oh, we're in a very clear trend here, right? Or if volume fades and then like you showed on that one, like you break a line where there's a lot of eyeballs, unless there's another quote unquote fundamental or market sentiment driven news catalyst, then the probabilities of it fading off are like probably 90 something %, right? And especially in a bear market, right, where it's a little bit dangerous, like, okay, you get the initial pop and then you're kind of consolidating mid-range. Well, is there going to be a reason for it to do a second and a third extension? Or are people going to get, a little bit shaken out and then the first sign of weakness, it just reverses? So I like how you talk about that. And I think risk management on coins that are early is very, very prudent, especially in a bear market.
Yeah, absolutely. And like the thing that I like about consolidation structures is that, it becomes very clear when to cut out, when lines break or support breaks, whether it's horizontal or diagonal. In this case, I would like the diagonal because I'd be able to cut out a little bit earlier. Mm-hmm. But I just, this could, because we're in a bear trend, this might lose its hype, right? Last week or whenever it was the, the pump of the week and everyone was doing backflips over it. So its possibility could just fizzle a little bit. Let's see what it looks like on the USD chart. Sorry, I'm getting lag on Coinergy a bit too. BTT USD. Is it going to show me USD? USDT? All right, we'll do USDT. Good enough. Yeah. Similar kind of similar kind of thing happening here, but lower high.
Hot is also kind of similar, where
Which
it had the what was the news piece? They launched the product,
yeah,
and then we haven't gotten a secondary breakout, but it is looking more like a bull flag.
yeah. Which coin?
Hot.
Hot.
Holo.
Oh,
Yeah.
Holo. Okay, I haven't looked at that one in a while.
Yeah, it's still holding up, but basically looks like a kind of a classic bull on the daily.
Yeah.
Yeah, or you could see it more clear there too.
Big consolidation pattern.
Yeah,
here.
the problem is
And
the
then
volume on that. Let's see.
So yeah, right around here. And this is just one of those coins again that I'm just being really patient with. And there's some projects I did really well with in 2017, like Stratus, for example. But I sold way too soon.
Yeah.
I think I went all out on a 10x and it went up 100x or something stupid or higher. So, or even higher. So
That's the thing. They look sleepy as hell until they don't, right? It's like, but the beautiful thing is like, even if you sell, say, half or more of your core position too early, if you do go into a ridiculous bull sprint, there's trading opportunities, right? Where you can trade the flags and the breakouts and the dips, but
yeah, absolutely.
Because you accumulated this one, right?
This one's interesting. So this is my I consolidated a lot of my crypto and my funds, pulling stuff off of exchanges because the whole Quadriga hack.
Mm-hmm.
But as far as like the order of bags, which one's the heaviest? So Bitcoin's my number one, Tezos is number two, Zcash is number three, and Holochain is number four.
Oh, interesting.
I bought Holochain when it was on Ether Delta before it even got listed on Binance. It was about 6 Satoshis Bitcoin wise. So that's about 33 Satoshis. So this position dollar wise as well as Satoshi wise is actually still in profit, and up probably at least a triple anyways. Well, Satoshi wise it's up a lot more than a triple, but dollar wise, let's see if it actually, I think it did break a new dollar high, but based on Bitcoin's price action, maybe it dipped a little bit. No, it's still, I guess it's still
it's very similar.
Yeah, it's still at its highs dollar wise. It's still kind of like close to the all-time highs here dollar wise. And so when I bought it was like down here, right? It had this initial sell off, and then this spike right here I think is when it got added to Binance. So that was on the 24th, and so we can see that right here on the 24th, that little spike. So I bought it like right in this little dip here. It was probably just like a few weeks beforehand. And I've actually just been patient with it because this is one of those crypto projects that I think is unique enough and innovative enough that if they succeed in pulling off what they're going to do, I think it's actually going to be a really big long-term gainer.
The thing is, it's actually trading good volume too. Like I'm just looking on CoinMarketCap over the past, like ever since it broke out, and it's trading anywhere from like 10 to 40 million US a day.
Let's see. Yeah, right now it's about 6.5. It seems like it popped up to 30.
Yeah, it got up as high as 30 or 40, and then it's in between like 5 or 10 a day during this consolidation. So yeah. I do like that. Like one thing that is very frustrating, and I'm sure a lot of you guys have seen this too, is where like you have a coin or something that you accumulate kind of early, and then it has its first breakout, and you're like, oh, here we go. This is going to lead to a multi-week or a multi-month move. And then you watch volume, and it's like, wait a minute. How do we go from trading $50 or $100 million a day to like 2? And then, then you look at the exchanges and you're like, and that's probably fake volume from one of these shitty, like, Asian exchanges. But this, I mean, as long as Binance is being honest with their volume, I mean, on Binance today alone, it's trading 2.5 million. And then there's some other like smaller exchanges. So even if you say like it's only trading half of what it's actually showing on CoinMarketCap, at least that's something, right? So I'm not saying we're definitely going to get a second push, but if we did, I'd be like, okay, there's actually some real liquidity behind this.
Yeah, absolutely. And this is like, even though I could have traded this, like when it got listed on Binance and it popped up here, you know, like I could have sold, and then I could have aimed to buy back in, and then, you know, spike and so on and so forth. But I just held. The price is actually higher than it was on the initial spikes, and I believe that come next bull run, the price is actually going to be a lot higher than it is even now. So I'm just being very patient with this.
Mm-hmm.
But one could easily, you know, like if one looked at here, you can see Satoshi wise, you can see how prior resistance turned support, and it basically just kind of like consolidated here. And then as far as like an early entry, like if you see something like that but you're still not sure, to me an early entry would be as soon as it breaks the diagonal line would be an early-ish entry. And if it did a pop or full retrace or broke below this, I'd probably cut it. But usually I've had good moves by catching it early here, especially after a longer period of consolidation. It's almost kind of like, you know, just a triangle type breakout. Yeah. And then there's the one could also just like add to their position on the horizontal breakout.
That's more my style. I like paying for confirmation.
So there's like could be this, could be that, could be both, or it could be like a little bit more aggressive, but perhaps requiring more patience would be, you know, buying at support and then cutting if that support broke. Different ways to do it, but that way is like you probably end up waiting for a long time. Like when I bought it on IDEX, it was really only a fundamental play. There was really no chart to go off of because it was all traded in Ethereum, and the volume was so low, and the chart was very choppy that I just looked at the fundamentals of the project, and I was like, you know what, this one could actually turn into something. So I was like, I'll take a stab. I'll buy some of this.
Yeah. I think this is a good time to actually answer David's question. He says, I know you guys aren't actively trading so much right now, but some of us are trading the 30 to 50% pumps to try to compound. What do you guys think of that? So for anybody, so, you know, again, kind of talking what Rocky said, like he's not super actively trading for the smaller moves, and neither am I so much. There's two ways to play bear markets. You can either actively trade the hype, right? The same strategies that we've been using for 6 years now, or you can wait and press the gas during bull markets. And we're not going to tell you which one to do because there's no right answer. Like you can either be patient and wait for the big moves, or you can actively trade the, you know, anywhere from, I'd say 20 to 100% moves. The thing that I would just caution you guys on is in a bear market, you don't get the same follow through that you get in a bull market, obviously, right? And what does that mean? Well, you have a lot more pop and flops. You have a lot more traps. You'll get breakouts, but they won't go parabolic, right? Reversals into prior resistance will work a lot faster. So what we do in the chat room, and what we don't want to do actually, is we don't want to encourage over trading, especially with newer traders that tend to get trapped a lot in bear markets. But if you have that skill and you want to be more aggressive, feel free to post charts and ask questions in the crypto market chat. And you know, maybe we'll participate, maybe we won't on those smaller moves. But if you are, I mean, feel free to post them and we'd be happy to talk about it with you. But at the end of the day, it's really, you have to identify your own risk tolerance, right? Like if you are comfortable being more active in a bear market and you understand how to manage risk through position sizing, then by all means have a ball. But just because you see us being more patient and waiting for the bigger moves doesn't mean that it's bad. But at the same time, we don't want you guys over trading chop. That's why we're deliberately more quiet during bear markets, and we don't get excited about every little pop on a random coin, right? Does that make sense, David?
Yeah.
Do you have anything to add to that? Or
for sure, the time where I was most active in this bear market was, during the initial crash and bounces.
yeah,
Because like right up until like April, May, right up until from, let's say December to May, because to me, the bear market started up here when things were going parabolic, even before it crashed. I was fattening the hatches. And so this is where I was doing the most active trading. And then in through here, when things were a little bit, I'm just using Litecoin as an example, but, you could replace this with a Bitcoin chart. Like in through here, I was buying some stuff, and I bought some more stuff here, but now I'm just kind of, there's not a ton for me to do because the volatility for myself anyways, in the style that I'm used to trading, the volatility isn't anywhere close to the same as it was on the initial crashes, the initial bounces. You just saw like the bounces just kept on getting smaller and smaller, just like a ball that's, initially the ball bounces really hard and then it starts to dribble and then it goes still and flat. And so like even the recent drop, we had a small little bounce here, but really wasn't your typical, like, typical bounce play would have came up and at least retested 6K and not take 2 months to do, right? So it's just a little bit of a different environment as far as trading, but we've been through this before. Yeah. Like I pointed out before with Litecoin, I mean, the only action, I mean, one could have like traded in through here and these little moves and stuff in Litecoin. And I was trading, actually, we were trading this or whatnot, but my personal goals have changed. That said, I can post a lot more charts in the trading room. Even if I'm not taking trades, I can still share and post charts or whatnot of possible setups. Right now, like if you look at Litecoin, so someone asked about Litecoin, you could see like it's interesting. It had a horizontal line breakout, but not by much because the starting point was down here, right? It probably moved up fairly quickly. Let's break it down in an hourly to see. Okay, so it probably moved fairly quickly. So it probably was time to catch some of this. And let's see how high it actually moved up. Okay, so it went up about 44%. So in an instance like this, now there's one thing you definitely don't want to do in this choppy market is you don't want to look at a market and then like see it Litecoin pop up here and then say, sweet, I'm going to buy some, made a move, because right now in these choppy markets, like we're getting a lot of those Bart Simpson and full retraces, right? Yep. So if I were playing the smaller time frames, I would probably want to catch this. I would probably want to catch this move like as it's breaking out here, and then I'd probably just take profit as it comes up into resistance. Like, so maybe, maybe if maybe something like this, if I were like trying to scalp smaller time frames, maybe I would have like bought here and sold at resistance here or something like that, 18% or whatnot, if I was into the smaller moves. Like the way this looks right now, it could easily just do what this did, right? It pops up, looks like it's kind of consolidating a bit, and then one day, full retrace, I'll go back into the gutter and then some sideways chop, and then
yeah, yeah, kind of the rule for me is if you're looking at these shorter term time frames, it's like usually it's better to start with the daily and mark up the major structure zones, right? The the stronger support and resistance areas. And then if you are day trading that or taking shorter term scalp type plays, make sure that you're not buying into the areas where the order flow is going to get really heavy against you. So like, and what this requires is a lot of patience. And you, whenever a move does start to happen that you're anticipating, you have to be there and you have to be ready. So for me, like, could I go in and make a little bit here and there? Yeah. But the amount of time that would require and discipline and focus is a lot. And like, I just personally, my schedule, I don't have that type of time. But for you guys that are like, hey, we can sit there and be more aggressive and be more dialed in and focused. You know, I did that for over a decade. Like I day traded, I did the whole all day, every day thing, put my hours in. Like, I personally, at this point in my career or my life, like, I like to wait for the much bigger moves, trade less, profit more. But for you guys that have developed that skill, and if you're looking to just leverage up or, you know, meaning grow more aggressively during a bear market, that's how you do it. The downside, or I guess the caveat is it just requires more time and focus and discipline, right? And the truth is, a lot of people, when they try to do that, they just end up over trading. So if you can tattoo on your forehead, don't overtrade, plan your trades, know when to execute, and you can do it properly, then by all means do it. But just please don't message me a month from now and go, man, I took 400 trades and, you know, I just had death by 1,000 cuts. Like, that's not what we want to have happen.
Or getting liquidated, too much leverage on spiky moves.
Yeah, exactly.
That'll happen a lot too. And yeah, I completely agree with that. I mean, 2015, 2016, 2017, you know, I was like on my computer all day, and I wasn't just trading, but I always had my charts running. Mm-hmm. So if there's something happening, I was usually like right there, you know, front and center to try to find that type of thing, right? Because you got to be fast on the trigger. Right, because you know, if you want to do those smaller time frames, there's certainly tradable price action, but you have to be fast on the trigger. So, like in this instance with Litecoin, aside from this little spike here, most of the resistance seemed like it was in through here, and you'll notice it actually hit resistance in where prior support was, multi-month prior support, right? So just if one is gonna play the smaller time frames, generally, if you see a major resistance area like this where you have prior support, generally that's a good area to take some profit off of the table.
Yeah, and definitely don't trade into those areas. If you get like a late fill, or if you miss the initial pop, then you know that's going to happen a lot because this is a 24/7 market, right? And you know, very few people outside of Rocky can sit there for 24 hours a day and not sleep.
Yeah, and it has its sacrifices and consequences, you know. Now I've been training a lot more, exercising, getting back in shape. It feels great, you know, just kind of balancing things a bit. For Litecoin right now, what I would want to see on this is follow through. So if it flops below, so now we had some resistance up here. If it flops below that, then it's probably just going to full retrace and do one of these. And then they'll chop around. And then that's kind of like a non-event. You know, I would say that you're probably, if you were going to try to trade these smaller time frames, you're probably reducing your risk considerably if you're doing the spot markets versus like, you know, trying to short this or whatnot. I mean, one of these days, these can make a very violent, epic move, or trying to long on leverage. That's just going to add a high degree of stress and risk. But then again, if that's your thing and you're getting results, then that's fine. What I would want to see for Litecoin, and what's interesting with Litecoin is it did test this area. Bitcoin hasn't tested its prior support resistance area, but Bitcoin chart also looks different. So for example, the difference between Bitcoin and Litecoin is they were mirroring each other perfectly, large descending triangles, but it was almost like Litecoin was a leading indicator and showing where price action was going to go in Bitcoin, because Bitcoin stabilized in through this area and went flat all through here. And Litecoin just kept bleeding out. Its support broke a lot sooner than Bitcoin. And so it dropped percentage-wise. It's down way more than Bitcoin was. So 94% versus probably like 81%. So that doesn't surprise me that it's like retesting, support turn resistance a lot sooner, because for Bitcoin to do that, it has to come all the way up to this area up here. So it's got further to travel. Now, if we see more fall through with Litecoin, like let's say it pops up above this and then retests support. And then now you've got some clear horizontal resistance in through here. If it were to break that, then suddenly, now we're creating like an inverse head and shoulders. Suddenly this would be sign of a strong sign of a possible reversal. If Litecoin started doing that before Bitcoin, then maybe I would take it as a similar sign of this, but in reverse, just how it dropped to lower levels months before Bitcoin. Perhaps it's possible that it might get out of the trenches months before Bitcoin. We'll see. Obviously, they're still very much correlated. So, if Bitcoin were to snap support, then I highly doubt that anything would hold up. I think everything would bleed out as well if Bitcoin would snap support. We haven't seen any change in correlation at all. So Chris just posted a chart, so I'm gonna.
Yeah, that was kind of, so I was just looking at like if we did a 1, 2, 3, 4 above 50, because 50 is a nice round number.
Yeah.
And if we had, set risk below, what's that level? 37, 38.
Mm-hmm.
You can see, it's not even a 2 to 1. So that, for me, whenever because I can map these types of trades out all day, right? And then like I can set alerts and then catch them. At the end of the day, then I ask myself, I go, okay, is the juice worth the squeeze? Like, is the time and the effort and moving the capital around, is it worth the effort, right? And for me, whenever I see something that's kind of mid-range, A, B, we're in a bear market, C, the risk to reward isn't even a 2 to 1, and then it's uncertain if it would even do a real breakout or if it would just be choppy in between 50 to 70. For me, these are the ones that even if I think that there's a slightly higher probability that it's going to do something, if it sets up like a 1, 2, 3, 4 breakout, a lot of times I'll just let them go. And I'll say like, oh, okay, like I understand what's happening. I see the edge in the market, but as like, just my mentality is now like I have no problem letting a lot of these like smaller plays just play out without me. Whereas like in a bull market, or if there's like some kind of like black swan event or fundamental news catalyst that comes out that creates like a all tides rising effect, then I'll be super aggressive and I'll have like 4 or 5 trades that are basically sympathy plays at the same time where they're all kind of mirroring each other. Like we've had that in 16, 17. But like a lot of these, like, and this is actually a good exercise, guys. Like for anybody who wants to go in and do the TA and run the trade ideas, you feel free to post those charts in the chat and we can look at them and talk about them and stuff. But don't feel like you have to catch every trade, even if you think you see something that you know is lining up. Ask yourself, like, is it worth the risk? A, do you have the time and the mental capacity to catch it, right? And that's why I'm not a fan of using like really small time frames. And then if it is, great, take it. If not, don't have some sort of guilt or some sort of like FOMO of like, or like boredom get a hold of you, right? Boredom is one of those things that is in trading and investing is actually a good thing. It sounds kind of weird, but it is. Whereas like if you're building a business or doing some kind of entrepreneurship play, obviously more action, push more, but in trading, it's the opposite. So.
And then you have the crypto trader's dilemma. In order to, there's additional risks. In order to take these smaller moves and invest the time, you also need money sitting on the exchanges to trade
Yep.
this, right?
Yep.
And I had money sitting on the exchanges for all of 2018. Like in the bull run, it's not a problem to buy a bunch of coins because actually, let me just go back here on Bitcoin. And I was doing this quite, it's a pain in the butt because it takes a lot longer. But like pretty much from, from like in 2016 and even 2017 for the majority of 2017, one could go send money to exchange, buy a bunch of altcoins. Like I was buying a bunch of altcoins here, and then pull them all off the exchange and put them on your hardware wallet. You're in a bull trend. You hold the coins for several months. You ride the trend a bit. Then all of a sudden, it looks like things are getting shaky. You get a lower high. There's uncertainty around Bitcoin fundamentals. All the altcoin markets start to get correlated. They drop. I literally spent several hours taking all of my altcoins. A lot of them were tokens, so you can store them on Ethereum wallets, MyEther wallet through a hardware wallet, which makes it easy to store. And I was just literally like selling, cashing out. And then I had all that money sitting on the exchanges and USDT or USD. And then I went all in on Bitcoin with that money that I had. And then that's easy. You go all in on Bitcoin, you take that Bitcoin, you pull it off the bloody exchanges, and then you hold it and you start riding it a bit. And then maybe you take a little profit and, maybe still keep some on the exchanges just for smaller moves and stuff. But for the most part, it's actually very, you eliminate a lot of counterparty risk when you're trading and holding big positions and stuff in a bull trend, because you can really just hold on to your private keys and just transfer to exchanges when it's time to take profit. When you real dilemma is when shit goes parabolic and you're like, oh crap, what do I do now? Right? This we're going into a bear trend. What I got to do? So, I took a mixed approach. I put a lot into the bank and diversified. I decided to keep some long-term Bitcoin holdings because I never want to be all out of Bitcoin. And then I split up my capital amongst multiple exchanges, amongst several 4 exchanges pretty much, right? And for all of 2018, that was fine. I was able to trade that capital and hedge, and damned if you do, damned if you don't. And people say, oh, well, not your keys, not your coins. It's like, well, okay, well, what do, right? Do you lose the 80 to 90% of the value and not lock anything in? Do you put it all in the bank? If you put it all in the bank and you have to transfer it out, well, sometimes it takes days to do unless you find some instant transfer. But usually for like large sums, I haven't seen any service that had instant transfers for large sums. I mean, now Binance has, you could buy with your credit card or whatever, but they're charging like 3% fees or whatever. So that's ridiculous. If you're putting in like 6 figures on exchange at 3% fees, you're losing a lot of money just on the transfer, right? And so now, worked fine, and it works great until it doesn't. And so now I'm probably taking a modest hit like on Quadriga. So as a result, I had to really, really change my own risk tolerance and risk assessment. So now it's like, okay, well, prices are a lot lower. I might take about a mid-sized hit from Quadriga. Now, obviously, I didn't keep more money on there than I couldn't afford to lose, but I always acknowledge when I have money on exchange that it can go bust. You can lose it, but it's still a hit nonetheless, right? So now at this point, it's like, okay, so that's why I sent them my last alert. I pulled off all the money off exchanges. Majority of it was crypto. Padded up, I added to my Tezos bags because right now it's the only thing that's actually giving me passive XTZ just by holding it. So I'm like, might as well go for a lot more of that. And I like it better than a lot of the other top projects. And actually, I want to go into that a little bit, looking at some of the fundamentals on those top projects. And so now the price is low enough, and I can just be, I could just be a little bit more patient and just wait. And I did withdraw some of the fiat that I had on the other exchanges because I had to reduce my risk, because if you take a hit, then that changes one's risk tolerance, right? One has to adapt to that because you can't just keep taking hits. But as far as fundamentals are concerned, something I actually talked about briefly before and in the chat. So like obviously Bitcoin's still the king. So I'll just look at like the top coins on a fundamental level. So obviously Bitcoin's still the king. It's still my largest position because of that. But it's not something like most of the Bitcoin I have now are just old Bitcoin that I accumulate at lower prices. I'm not necessarily as keen to like reaccumulate $3,500 Bitcoins or whatever, because that's still like at least a good solid, 10 to 15x multiple from previous accumulation prices. But I still have as some of my largest position. Ethereum is obviously still top dog for altcoins by market cap and volume. And I would even say innovation and development, although they still have their growing pains and their bugs. Like there was recently Constantinople, another bug that they found in it. So they haven't been able to hard fork yet. So there still hasn't really been, like EOS and all these other coins say that they're Ethereum killers or whatnot, but I haven't really seen a lot of evidence on that. I do think that Ethereum, for all the hate that it gets, I do think it's a lot more decentralized than a lot of those other smart application platforms. But I'm not really interested in accumulating it because it's $122, and when you're trading and accumulating stuff at like $1, $2, $3, $122, just doesn't have the same flavor anymore for me, anyways. I try to look at opportunity costs and like percentage possibilities. Ripple, well, Ripple was good. It had some moment of sunshine. It's good for what it does, but in my opinion, it's centralized. It's highly centralized. A lot of it revolves around a company, and they can censor transactions and such. We've seen this before with one of the co-founders, Jed. Who is it? Jed? I forget his name. Jed. They took him to court and said he could only sell a certain amount of Ripple, and some of the accounts were frozen and such. So it's a good project. I have nothing against it as far as like trading or investing or whatever, but it is what it is, right? It to me doesn't have the same type of value proposition as something that's a little bit more decentralized. Litecoin's top dog for script hashing. There's nothing that competes with it as far as hashing power for script. It's actually, not my opinion, it's a solid number 2, even as far as hashing power. Has more hashing power than even Ethereum because they created ASICs. So the network's very secure, but it's still a clone coin, right? It's still a clone coin. It had a fair launch, so that's another great thing going for it. No ICO, no pre-mine, nothing like that. Decentralized because of that as well. But it's a clone coin. It doesn't necessarily offer a ton in the way of innovation. They usually just copy and paste Bitcoin stuff, and they usually do it first because it's easier. They have a smaller team, so it's easier to implement. So, Litecoin's helped out Bitcoin with stuff like SegWit, Segregated Witness, and Lightning Network and stuff. It implemented it first. EOS is kind of like they took the delegated proof of shares model from BitShares, right? Obviously, same developer, same kind of product, but with more Turing completeness on it. It's basically I almost see EOS as like a BitShares 3.0 type of thing, because it's kind of going further on what I think Daniel Larimer wanted to do in the original BitShares. It has more capacity, but the thing I don't like about EOS is I'm not a big fan of the delegated proof of stake model. And that model is basically, you basically have coin holders vote for, in this case, is 21 block producers. So basically 21 people who are voted in basically confirm all the transactions on the blockchain, and they get all the rewards. And they also, they've also already censored transactions on the blockchain, so it shows to centralization. Now, the reason why I don't like this model in particular, especially for something like EOS, is they had a year-long ICO, and we don't know how much of these tokens or coins the founders got through this. And if there was, some people suggest, and there's been some analysis to suggest that they've recycled some of the ETH, sent it to Bitfinex, but and then sent it back and just kept on using the same ETH over and over again to get more and more coins. Because if you're, let's say you did that and you're a founder, or you're in with the founders and you have a majority share in the coins, then you can vote for yourself and your buddies all day, every day, your 21 block producers, because you have majority coins, right? So I don't really like that model, because it doesn't share a lot of the profit rewards, and it seems very centralized to me. Like, no offense to anyone who's into EOS or whatnot. These are just, or Ripple or any of those other coins. These are just my own personal opinions. Now, the thing with EOS is Tron and Neo have a similar delegated proof of stake model, right? So they're all kind of following that model, and they all seem very similar to each other with slight variances. I mean, if someone's more technical than me and you want to share more information why you agree or disagree, feel free in the trading room. We can have a good discussion. I'm always open if there's anything that I've missed. Bitcoin Cash, I just see that as a cloned fork coin. I don't really see it offering, increasing block size. To me, that doesn't really offer much in the way of innovation. Stellar's just a clone of Ripple. Binance Coin, that's certainly interesting. It's centralized. It's linked to a successful exchange. Obviously, it's done really well. It's in the top 10. But it's not decentralized. But I'd almost see this as maybe having like a bit of a stake in the Binance platform, which is why I think it's done well. Bitcoin SV, it's just another clone coin of another clone fork coin. Cardano is very similar to Tezos, except they're not on mainnet yet. So Tezos is a higher market cap, but Cardano is a higher market cap, but they haven't even launched their mainnet, whereas Tezos has been live for months, and so they don't even really have full proof of concept. Monero is good privacy coin, fair launch, all that great stuff. I think it was a clone of CryptoNote, so it wasn't the original that did this particular mixing algorithm or whatnot. So in my opinion, my personal opinion, obviously my opinion's biased because I bought a lot of Tezos, but I bought a lot of Tezos for this reason. When I looked at a lot of the top projects, in my opinion, the liquid proof of stake model that Tezos has is literally the best proof of stake model that there is right now. You have regular proof of stake, which is very complicated to set up nodes. It can lead to high degrees of centralization from whales just basically dominating all the increases the propensity for 51% attack. And then you have delegated proof of stake, which is just voting for like 20 to 30 delegates, but you don't get to share the rewards. Whereas this is more of a network where everybody, if you put your coins to action, if you don't want to run a full node, you just delegate it. They give they take a 10 or 15% fee or 5% fee or whatever they're going to charge, but you get to share in the block rewards. So in my opinion, that makes it a lot more decentralized. You also get to vote on those. So it's to me, that makes it a lot more decentralized. So as far as proof of stake, this is still my favorite. And I think it's really under a lot of people's radar, predominantly, I think, because of just bad publicity, right? The drama that ensued with one of the members of the foundation. They had a bad apple in there. He's gone. That created a lot of negative media hype. And then there's been these lawsuits, just one lawsuit now. But I posted an article. It's very interesting. I posted an article on that quote unquote class action lawsuit of like literally like 3 plaintiffs. One of the plaintiffs basically Reuters just reported he got dismissed. He was the main plaintiff. He got dismissed because basically people in the Tezos community did some background investigation on who this plaintiff was and pulled out all kinds of stuff on how he was trolling on Reddit and buying Tezos during his lawsuit and just saying like, racist stuff and all kinds of just really acting like a troll. And then apparently these other plaintiffs are actually like close friends with the lawyer. And this is the lawyer's first like law case ever and whatnot. So there's a lot of interesting background stuff. And so people in that community are kind of petitioning because they're like, you know what? None of the ICO participants are actually trying to sue the Tezos Foundation. So it seems like it's kind of a little bit opportunistic right now. And I also really don't get the logic behind, like, let's say someone did buy the ICO. I don't get the logic of like, I'm going to buy the ICO and then I'm going to sue them because they sold me a security. It's like, well, number one, didn't you read the terms and conditions? And number two, do you not make your own investment decisions? And number three, it actually was triple the ICO price when it launched, the mainnet launch. So I'm not quite sure where the quote unquote damages, financial damages come from, right? Right now it's actually at ICO price. So on that note, there was one interesting thing that someone had posted on Twitter, and they'd linked it to an SEC thing. Essentially, SEC commissioner said when tokens are being sold as investment contracts, when tokens are not being sold as investment contracts, they're not securities at all. Tokens sold for use in a functioning network rather than as investment contracts fall outside the definition of security. So this would explain why Ethereum got a pass. Right? A lot of people, where everyone was watching last year as to, I think it was last year, 2017, can't remember. I think it was last year, as to whether or not Ethereum would be a security or not, because they did an ICO, they raised money, just like a lot of ICOs. And they said, no, it's not security because it's a network and it's a decentralized network. And so obviously that's like one of the reasons why I've invested heavier in networks versus dApps, basically just quote unquote decentralized applications. A lot of those dApps are not actually very decentralized because oftentimes there's a company revolved around them. And we've seen time and time again, when the company packs up ship or the founders leave, the dApps die, the tokens are worthless, right? So that's like to me, like a metric of decentralization is if the founders died or disappeared, what are the probabilities and possibilities of the network or the dApp still surviving, right? Would it be over or would it continue? Like with Bitcoin, Satoshi Nakamoto left, 10 years later, look where we're at. Bitcoin's doing better than ever, right? So that proves that it was decentralized, right? Other parties stepped in and stuff. It's not like the network just died because the founder was gone, right? Same thing with other networks. If the company or the founders or whatever leave, is there enough community participation? Is it decentralized enough in the way they confirm blocks and stuff for people to jump in and just take over development and continue on? How decentralized is development groups and so on and so forth? Someone just said that that Tezos just popped a little bit. I'm just gonna take a look, and I just think it's a sleeping giant. I obviously can be wrong, but I'm willing to there you go. I guess I just had a little pop for whatever reason. Speaking of which, and this could be one of the reasons, maybe some people it's starting to hit people's radars a bit more now because of this news, right? And to me, this is some fairly big news for Tezos. So this financial group, Elevated Returns, wants to tokenize $1 billion worth of real estate on Tezos, right? So tokenizing real estate, I would see the benefit of this being, so someone had asked, what would be the benefit of doing that, right? Well, it would allow people, for starters, it would allow people to own a piece of, let's say, luxury real estate. So like maybe the difference between that and like an investment fund is with those REIT investment funds, tokenization, you probably have settlement faster. You could probably trade the tokens faster, all the things that you get on blockchain, which is why a lot of exchanges like the New York Stock Exchange and stuff are getting more and more into blockchain, probably because to increase settlement times and stuff like that. And you could actually, with real estate investment trusts, you actually oftentimes you just kind of hold an IOU type of thing, or you have to go through like a third-party broker. Whereas with tokens, you can actually hold them yourself. So this is kind of like building on that same model, but just giving a little bit more granular control, real-time granular control to the user. Same reason as tokenizing securities. Just kind of changes the industry a little bit, speeds things up, and gives a little bit more granular control. You know, like a lot of securities are all cleared through the DTCC right now. And if most securities eventually move to blockchain, then you just get real-time settlement without third party necessarily needing to clear that 3-day wait time, right? So I think this, if this is legit, I did look into them, this company. It seemed legit. They've already done some real estate moves. So this could be good. This is actually more than the $1 billion worth of tokenized real estate. Is actually more than the bloody market cap of Tezos right now. Where was it? What's the market cap? Yeah, it's not even $1 billion. It's like $250 million right now. So this is what I'm talking about. Yeah, I'll post this in Discord for you folks. This is what I'm talking about with ecosystem growth, right? I mean, I watched Ethereum grow out of basically peanuts in 2015, and it didn't happen instantly. It wasn't like, oh, Ethereum's launched, and then in the first year it was a giant. For the first year, it did almost nothing. The first year they didn't even have a graphical user interface on their bloody wallet, right? So it was basically just like command lines for crypto nerds and some speculation, but there wasn't a heck of a lot happening. There wasn't a ton of dApps. They didn't even have a GUI for their wallet. It was only in 2016, about a full year later, 2016, the market started to take off. You start to see more dApps. But it was really only in 2017 that we actually saw Ethereum explode with the whole ICO boom. And then, you know, it's like a gold rush that happened on Ethereum. So it took a few years for its ecosystem to grow. But the thing is that the thing I like about investing in networks and ecosystems is that as more securities get registered, or more tokens or whatever get registered on the blockchain, it just adds value to that network. So even though Ethereum's market cap is 12.8 billion, you could actually add all the other dApps and tokens and stuff that are on the Ethereum network as a part of the value on that network, right? So it's not just its token, it's all the other value that gets brought to the table, and that just increases demand for ETH, and it basically just becomes like a supply and demand metric, even though most dApps don't have a lot of users right now. It's still very early. A lot of them are kind of still useless, right? But for the network grew first and foremost from development interest from developers, and then from speculators, and obviously that was enough to grow the price nicely. So going back to, so that was that. Other big news. So first, U.S. pension funds taking a plunge in crypto investing. So this is pretty good. So Fairfax County, Virginia, basically they're investing 40 million. So that's a good sign, right? If we get more pension funds investing in crypto, then suddenly crypto starts to become a backbone of the economy. We're just seeing crypto slowly becoming more and more entwined into the regular economy. And to that point, you know, NASDAQ is adding Bitcoin and Ethereum data to their services, right? They're adding the price feeds to their global data services for professional traders. So again, it's just slowly being integrated in. Where we'll really see crypto get integrated into mainstream economy is when you start to see it more in pension funds, mutual funds, hedge funds. As soon as you start having it being a part of a diversified portfolio as a commodity, even if it's just a small percentage in each one, then suddenly we'll probably end up seeing a lot more correlation between Bitcoin, crypto, and the other markets, just like we see a high degree of correlation between many of the other mainstream markets. So I think we're seeing just more and more of that, in my opinion. Speaking about Ethereum, there was another bug. So another bug found for the Constantinople hard fork. So actually another benefit to Tezos is the formal verification process for their code. That whereas mathematically they can make sure there's no bugs in the code. So that I think when you're dealing with finance and smart contracts, you probably need the same level of security as you would launching a rocket ship, right? Obviously, you don't want bugs in your software if you're going to send a rocket to space. Otherwise, it's going to blow up on you, right? Or an airplane or stuff like that. You need a high level of security on that. And then the big news today, all this we need to pack up ship, folks. It's over. JP Morgan just killed the Bitcoin dream. So that there's a JP Morgan coin now, which is kind of ironic because Jamie Dimon's been hating on Bitcoin passionately since 2015. But what's interesting is that JP Morgan has been trading Bitcoin for years. So, you know, some have speculated as to whether or not some of that FUD is buying dips or whatever. But this is certainly interesting, right? I don't see this as a competitor to Bitcoin. I don't see this as killing Bitcoin at all. The media, you know, maybe the media has an agenda, or they're just plain stupid, or they're just going for clickbait. It could just be clickbait, you know, hey, look, I'm sharing this article. Even if I'm criticizing it, it's getting them traffic, right? So whether you love the article or hate it, I think a lot of times they like to get a rise out of crypto. Folks are so passionate about things that if they say something like this, suddenly we'll all start, you know, posting and criticizing it and sharing it, and that's just getting them more traffic, which is kind of a win for them, right? That's all they care about at the end of the day, more traffic stats. So, but they're launching a stable coin, so basically you'll be able to transfer. Well, we probably won't see it on any exchanges or anything. I think it'll mostly be either between banks or financial institutions where you'll have a dollar of their coin that you could easily transfer, and then you can redeem it for a USD in your account, right? So it shows that blockchain is starting to permeate the mainstream finance, right? And you know, they can't use blockchain without paying some kind of homage to Bitcoin. So I still see that as a bit of a win for the industry. Also, it could actually increase our ability to audit things, right? What will it do to XRP? That's an interesting question. I mean, there's a lot of speculation as to whether or not that'll compete and be more of a competitor to Ripple, what they're trying to do, because, you know, the Ripple network uses mostly a lot of IOUs. Ripple's not XRP isn't an IOU, but you can transfer on the network. You can transfer dollars, you can transfer Bitcoin, you can transfer all that stuff on the network, but they're all IOUs. So that's a network that basically still has counterparty risk. So think of it as a network where you can transfer IOUs between banks or exchanges fairly quickly. And Ripple is very, very quick. I mean, it's lightning fast. I used to arbitrage on it a lot. And XRP is lightning fast, so super fast. But it's an IOU network, except for XRP. And you don't even need XRP as a reserve to use that IOU network. So even calls into question how much utility XRP actually has. I mean, I know some of the fees are calculated in that. So it would be very similar as far as competition is concerned. But the question is, where are they going to launch their JP Morgan coin? Do they have their own blockchain for that? I imagine they have to have their own blockchain. or are they using another network or blockchain? So I'm not sure.
I think they're using the same blockchain as OneCoin. the same Excel spreadsheet format.
OneCoin. Wasn't that like a Ponzi scheme from?
Yeah, that was the one before BitConnect.
Oh yeah, OneCoin. Oh, that was like those cloud was it that cloud hashing Ponzi or something like that? I think I remember.
Yeah, it was that one lady that got arrested. Yeah, there was a man. I can't even remember now. There's been several of these Ponzi schemes, but yeah, that one was huge in India, I think, or the Middle East somewhere. Like there was one place it was just blowing up.
Yeah, let me see.
And I'm like, do you guys realize this is literally just an Excel spreadsheet? Like, no blockchain.
Oh, OneCoin. Yeah. Okay.
Remember that? Yeah, I want to say it was 2015 maybe or early 16.
Man, their website's still alive.
Yeah, Wikipedia says OneCoin's a Ponzi scheme promoted by offshore companies. Yeah, Dubai. It was big in Dubai, Belize. Yeah, they brought in 4 billion with a B.
That's man. That's
Yeah, I have a guy that I talk to that's in Asia that does a lot. He's like a I don't know what he does for a living, but he speaks a lot at crypto conferences,
yeah.
and he's like the anti-scam guy. So he said that at all these conferences, there's all these Ponzi schemes that we don't really hear about in the West.
Yeah.
And he's like putting himself at risk out there, like publicly talking out against these things and talking about how sad it is. I think that one that. Man, it was something like, what was it? $600 million was stolen, and it was mostly out of Vietnam. And he was there like trying to tell people that it was a blatant scam. And these things are crazy.
Yeah, how could I forget OneCoin? I used to make fun of that all the time.
Right. That was the BitConnect before BitConnect.
These shady scams just they vaporize out of my memory after a certain period of time.
Yeah,
I gotta like delete some of the data on my hard drive in my brain. So another update, the whole Quadriga CX thing. So for anybody who is who has money on there or whatnot, so they had another court hearing today. At Jack Julian on Twitter reports on them live. So he does a live tweet storm while these are happening. So basically today, there's multiple different lawyers for the class action lawsuit. Quadriga, they're basically trying to consolidate everything and refund as much as they can. Unless they find some of their hardware wallets or some of this crypto or whatnot, then chances are, one might only get like 10 or 15 cents on the dollar. My concern though, even on getting 10 or 15 cents of the dollar is that, the lawyer and accounting fees can run up pretty high. So it's even questionable as to what percentage of that one would get. But they were discussing that in court. The judge said whoever gets it, he'd like to see the fees being capped so that the people get the most out of it. So I did submit some forms to one of the lawyers to put in my claim. And the thing with like a class action is that they'll just take their fees out of whatever is refunded or whatnot. So it doesn't cost any money up front. I'll share the link. Actually, let me just Jack Julian Twitter. So he's a CBC journalist. So I'll post this in Discord for you. But yeah, already, reading through this, I mean, already talking about Jennifer Robertson, which is Cotton's wife, she already put up $250,000 on lawyer and accountant fees, and this has only been going on for like a few weeks now. So it just shows you how quickly money can get sucked up. And if we're only, we don't know how much money they'll actually retrieve. There hasn't been any news on that. We know there's about 25 million that's being held with BillerFi or whatever that payment processor is. And then there's some other bank drafts and some millions held with other third-party payment processors. There's not a ton of crypto. So like, let's say that they could scrounge up like 40 million or whatnot to refund investors. With fees like this and the clock ticking, like how many millions are lawyers and accounting fees going to eat into that small amount based on the total amount that's owed, because that's only a percentage. And then obviously we don't know if people who are holding fiat or actually had bank drafts in the process being processed, if they'll get more, or if people holding crypto or whatever. I tend to lean thinking that it'll get split evenly, or there's also a possibility. The reason why I put in my claim with one of the lawyers yesterday is basically, I don't know how it works. I don't know if they're just automatically just gonna like contact everyone and just cut them a check, or if they're only gonna split it up amongst the people who claimed. Because it's also possible, like we don't know who all the participants are on an exchange. It's actually possible that some of them could be like criminal money launderers who aren't going to want to claim any of it because they're going to have to put their name out and whatever, right? So we don't know how that's going to play out. So I think the can's getting kicked to next week or whatnot. And another debacle, apparently, I don't know how this happened, but apparently Quadriga managed to accidentally, quote unquote, send about $500,000 to a cold storage wallet that's now locked away accidentally after the fact in this whole process. Seems very fishy. How do you accidentally send $500,000 to a cold storage wallet that you can't access? So I don't know. It's certainly interesting. It's an interesting case, interesting precedents. Fortunately, this is in Canada, so it's a little bit easier for me. Being in Canada and stuff, but it still kind of sucks. I mean, sucks losing money. So if I get back 10 cents on a dollar, I guess it's better than zero. So. But these are the risks, and these are part of the risks in keeping money on exchanges. And it's just a reminder, right? So, given the next bull run, when we actually go into a bull trend, it's actually worth, even though it's a pain in the butt to spend hours pulling off all your coins onto hardware wallets and then putting it back on the exchanges when you take profit. It's worth it, because if you lose money, and Cryptopia got hacked too, and they're bust. I only lost I had a little bit of money on Cryptopia, just dust. I think it was like $2,000. So I'm not really that concerned about it. I don't really care about that, but I had a little bit more on Quadriga, so it's a bit more of a hit, but basically, I think next time we go on a massive parabola. So next time we end up with something like this, like if obviously no guarantees, but let's say if in 2020 or 2022 we end up with this massive parabola like that, I think for the most part, like anything I cash out, instead of keeping on exchanges, I think I'm just gonna put it all in the bloody bank and then diversify that. Diversify into other things. And I did put a lot in the bank, so even though I'm taking a hit from Quadriga, I'm good, right? It's not wiping me out. I'm still okay from it, because I diversified and pulled a lot of money out of the bank. And actually, that was probably one of the best decisions I made in this entire bull run, is when I actually locked in hard profit, because for a couple of reasons. Like, once it's out of the markets, it's out, right? I mean, you could put in other markets, or you could put in real estate, or you could put in high interest savings or whatever. But once it's out, it is out, right? So you suddenly take off all, you've locked in those gains, you've taken out all the risk of basically losing that. Whereas you can keep growing and compounding it, bounce plays and so on and so forth, keeping money on exchanges. But if an exchange gets hacked, then suddenly you're giving blood back to the market. If you end up buying in a slow, choppy market and you get a drawdown, then you end up giving some of that blood back to the market, right? If you put some of that back into crypto and put on your private keys or whatever, keep your private keys, then risk of drawdown. So you have to really, it's just a generally good reminder, and it's something that everybody should really kind of etch into their memory or mind if we ever get a situation like this again in crypto, is just the importance of really pulling out just hard profit that you're just not going to throw back into the markets. That's out and it's locked in, and it's like no matter what happens from that point forward, whether there's a hack, whether you lose some private keys, whether you get some drawdowns or tilt a bit or whatnot, that you've covered your basis by doing that. So I think that's just a very important thing. And then one could also just kind of do like longer term position trading. Like one could, sell on the parabola and just wait for confirmed accumulation or breakout, cash that out into the bank, do nothing in between, and then take that money from the bank and pour it back into crypto when it's an accumulation, and just do like cycle to cycle trading. One could also do that, which is just pretty much like a trade, just on a much bigger and larger time frame. It's like take profit here and then buy the dip down here and then hold and wait. And one thing that I have learned the most in the last market cycle is that the majority of money is not made in the buying and selling, it's in the waiting. I think that's a quote from someone, but it really, really is in the waiting. Whether you're trend riding in a bull trend for months, for years, or holding an accumulation, or just waiting to buy and not rushing it and jumping in too soon. Oftentimes it's that waiting. And I think for the most part, a lot of traders and investors have a hard time waiting. They get impatient, and it's that impatience that really does it in. Either you'll sell too soon, buy too soon, so on and so forth, right? So usually the patience and the waiting is where it's at, where a lot of money can be made in trend riding. And I think a lot of, like, if I'm not mistaken, I think a lot of professional hedge funds and stuff too probably have more of an approach like what Travis has, right? Where he'll hold a position for like usually a year before he starts taking profit. What would you say, Chris?
Yeah. I mean, I think his sweet spot is like looking for a double or a triple over 12 to 24 months.
Yeah.
And then inside of that, I mean, there's swing trades, there's some news-based stuff, but yeah, for the most part, it's looking for those multi-bagger moves, right? And then if you can get a couple of those a year, that's where those kind of above standard market returns come from. So.
Yeah, I guess with the stock market too, to bang out a triple probably takes a lot longer than crypto sometimes, depending on the stock. Huh?
Travis has done research, and he's talked about this before a couple of times about how many stocks go up over 100% a year.
Yeah.
And it's a lot. I mean, they're and not even OTC like shit penny stocks, like liquid, NASDAQ or S&P type stuff. So there's a lot of opportunity. It's just finding the story before everybody else discovers it. And that's where his sweet spot is. And I feel like that's kind of our sweet spot too. And the crypto stuff is like always being dialed in and understanding the much bigger price patterns. And even if you do trade, like if you have a mixed bag, right? You have different buckets. You have your short-term trading capital, you have your position trading, multi-year holds, and then you have your cold storage. As long as you understand the context of the market environment that you're in and you adjust your strategies accordingly, you're going to do fine. It's the people that try to force when market conditions are not in alignment. That's where you can get run over.
Yeah, absolutely.
Yeah.
Absolutely.
So, Rock, one more thing I just wanted to mention, because I've been telling you guys that we're going to do a STO class. It's been slow going for me on this end, just getting approved and like actually being able to have something to talk about. So like T0 last week, I finally got approved, and right now I'm waiting on the bank wire to get over to them. Right now, the T0 tokens are trading at about 70% off of the ICO price. So that's great. And I think the reason why is because of the accredited investor limitation. So with T0's tokens, at least right now, the way that it worked is everybody that invested in the ICO, and they raised what, 134 million, I believe. Yeah, so they closed in last October, 134 million, and basically they had to wait 90 days minimum lockup period. And so what happened is basically a majority of the accredited investors that wanted in T0 bought the ICO. And so whenever they launched on their own exchange, which only accepts accredited investors, you have a much, much smaller buying pool compared to the sellers, right? Because you had all these people that verified their accreditation and whatever. Well, I don't know. Does anybody remember, did they actually verify accreditation during the ICO? I can't even remember. I assume they would, but I didn't personally buy in on the ICO. Anyway, either way, it's supposed to be accredited investors that have these tokens. And so because there's such a limited buying pool, when everybody went to dump at the same time, thinking they were going to double or triple the price from the ICO, it dropped prices significantly. So my plan is I'm probably going to buy like a starter position, like maybe 5% of what a full position would be for me, just as a start to kind of go through the process, make sure the platform works, understand, where and how I can move the tokens and stuff like that. And then I'm probably going to wait until they list other tokens to see what kind of potential revenue they can actually get this year from actually trading these security tokens. So that's it. Security tokens, again, is a much more slow moving process than kind of the Wild West ICO boom we saw in 17. But the good news with that is it's much more sustainable. So that's what I'm doing with that. Open Finance, I got declined because I'm a U.S. customer. And then Harbor, I'm approved with. I've been doing some due diligence on the first real estate deal that they did, but I think I'm actually going to pass on that. I'm trying to be disciplined because my natural desire is like, yeah, I want to invest on the first opportunity that I can on all of these STO platforms. But whenever I look at the assets and I see a real estate play that's only going to pay like a 7% return, I'm like, I don't know. I can do way better than that in other areas. So I'm waiting. I think my kind of prediction is in late spring, early summer, we're going to start to see a lot more tokens getting posted on these exchanges. I mean, it's kind of like, to me, this is kind of historic, right? Where we have T0 and Templum and Harbor and Open Finance and all of these STO platforms that are launching, and there's like hardly anybody there. It's kind of like whenever to me, it kind of is probably what Wall Street was like in the early days when you had people meeting under a tree, like exchanging physical shares at companies, right? That's kind of what this feels like. So it's cool to be a part of this first wave, but at the same time, it's kind of boring initially. So as we've said many, many times, boring does not equal unprofitable. Boring can actually, in hindsight, turn out to be the most profitable times to take action. So I'm keeping that in mind, but I'm also keeping in mind the idea that, hey, there is a very limited buying pool initially here. So there's much larger, in my opinion, much larger downside risks. And obviously there's the risk that these exchanges and or issuance companies or whatever you want to call them, there is a risk that even they fail, right? Like some of them are going to fail, just like we've seen regular Bitcoin and altcoin exchanges fail in the past. So with that said, I'm trying to do my best to be very disciplined and patient and not just throw money at projects just because they're tokenized.
No raining fun coupons, Chris?
Yeah, I do. And I'm like, you know what? Like, what would Warren Buffett do? And his whole thing is like, you don't strike out by not swinging at balls, right? Like you can let all the inaccurate pitches go by, and you don't get hit. You don't strike out because you don't swing the bat. The only time that you strike out in investing is when you actually swing and miss. Yeah. And so even if it's, smaller position size, like the Harbor token, for example, like the smallest investment is one token, which is $21,000, which is, it's not a small amount of money, but I could do a starter position with that. But like, even with that, I'm like, man, I don't know. I want to be disciplined, and I want to do fewer positions of larger sizes, right? So I'd rather do, $100K or $500,000 or something in a deal that I can see the potential of a double or a triple, instead of like putting that money to work at 5 to 7%, which I could do better in the stock market, right? Passively in equities, right? So I don't know. I'm spending a lot of time reading and researching and reaching out to companies and understanding how things are happening. But what I'm not doing is just throwing money here and there and distracting myself and being a piker trying to invest small sizes, right? And yeah, so that's where I'm at. I know that's a little bit of a tangent, but that's just my thought on that.
Yeah, for sure. Now, since it's a subsidiary of Overstock.com, I wonder, question I ask myself is, if T0 does well and becomes very profitable, will that impact the Overstock price of Overstock shares?
I think it could. One thing so I was talking to Travis about this yesterday, and I don't exactly understand the fundamental story of what Burn is trying to do with Overstock and what that looks like and how it could affect the stock versus the T0 tokens, right? Like it's a very strange situation right now where you have basically a company like Amazon Retail, right? It's an online retailer that is now a blockchain company, and Burn is completely obsessed with security tokens, which I think is a smart play. But I don't understand completely the fundamentals of how all of this works together and what the consequences are for if-then scenarios. If this happens, what does that look like, and so on. So that's what I was going to ask Trav on Monday at the stock market update, is to maybe make some connections. And there was I think Nick was posting this in Discord. There was some, and I saw this yesterday when it came out. There were some 13G filings from a couple of banks, I think, that came out where you have some of these banks that are taking large positions in Overstock. But then really? Travis is like, that's not necessarily bullish because they could be hedging those positions in different ways. So it's a very complex scenario. And right now, I don't know enough to make any big plays or even have a really well-developed thesis about what I think is going to happen or what this even looks like. So I'm still kind of in that discovery phase too.
For sure. You know, it's interesting with this Overstock chart is it looks very correlated to crypto.
Oh, like very much so. Yeah. I mean, it was
peak here right at Bitcoin's peak. Probably just by association, right?
Oh, very. That's what that bubble was all about. I'm not sure. So I think in the early 2000s, that may have been from that run from what was that, 03 to 04, almost 05. Um, that may have been driven by, you know, the e-commerce boom.
Yeah,
But it's interesting that, you know, the stock has just kind of floundered. And I mean, it is at accumulation levels, but again, their core business function could be changing. So just because we're at accumulation prices, I'm not exactly excited about just going all in and just buying the equity. So
yeah, for sure. It seems to me, just looking at, without necessarily knowing a ton about the fundamentals, but just market sentiment wise, because it seems so linked, correlated to crypto, and rode that hype bandwagon as a stock. I wonder if if T0 really took off and did really well. I wonder if that market sentiment would just carry through and we'd see another little.
I think it could. And it would depend on how the stock was related to T0 and how the capital flowed. And, you know, there's just a lot of what ifs right now. I mean, right now they basically launched a platform that looks like one of the first stock trading platforms ever from the 80s. Like, it is so oversimplified. It was kind of like they were like, all right, well, because they had some videos out that it was like an actual real trading platform, and then I don't know what happened to that. All it is now is basically a level 1 order execution platform. There's no level 2. There's no market depth. There's no time in sales. And that's probably because the only asset they have listed on there is the T0 token. You know, so once they get like a basket of security tokens that are tied to different industries, right? Like they can get some real estate, some startup equity, maybe some weird stuff like intellectual property rights, or, you know, I don't know what they're onboarding, but once they have a basket of that and you're able to see some liquidity in some non-T0 tokens, then that'll be more of a guiding light of, hey, you know, this is what kind of revenue it looks like they're making, and then you can kind of back out some valuations. But right now, I'm just confused.
Yeah, fair enough. And I guess other questions. So, like, if I were to dive into this on a fundamental note, questions I would ask myself are like, what's the total supply of this? I'm not quite sure what the market cap is. The volume's low, but you know, that's okay if one gets in early. I like this drop here. I like this price drop. That certainly fits my niche of what I'd like to see. It'd be nice to see what the total supply is. Also, you know, can they dilute at all? Like, can they create more tokens, or is it hard capped at what the ICO was? Because if it gets into like dilution, then that could obviously affect the price. And then I'd probably want to know, like, does Overstock actually have, like, does it own some of these T0 shares? Is it like a majority shareholder in this platform? So is it like a company within a company? Because if it were, and then if T0 went nuts, then that would be an opportunity for, like, let's say someone who's not a non-accredited investor, because you could probably just buy this, I would imagine, like anywhere, right?
So I believe the total supply, at least from the ICO, is something like 26 million tokens.
Okay.
And like if you look on Ether Delta, let me find the link.
Oh, it's on. They're trading on Ether.
No, I'm sorry, Etherscan.
Okay.
No, they're definitely not on Ether Delta. Hang on, if I'll post a link in the chat. Etherscan. So so it's called T0 Preferred, T0 Prop. Here you go.
So it's got 26 million, and right now it's got a market cap of like 83 million.
Yeah, so it's kind of strange, how this is.
Which could be I mean, if it turns into something, it could be a really, really great opportunity to invest on an exchange on the ground floor.
Yeah,
I mean, just look at like
post-
Coinbase and shit, any of those exchanges. I mean, what, you know, people, it's like what you were showing, right? With the seed rounds for Coinbase and stuff. If you invest a few million in it in 2015, 2014, now is worth ridiculous amounts of money. Could be one of those, right? It could be like,
it could be the one thing that I really don't like is how much money they raised up front.
Yeah.
Right? So like they raised a lot, and I take that into consideration. It's like if they started, you know, like Ethereum, what did they raise in their ICO? 16 million?
Yeah.
So at the time that was a lot, right? And then it was like, then they listed and then there was room for growth. But when you raise 100 and something million bucks at $10 and then your buyer pool is super limited up front,
Yeah.
it's just a strange dynamic, right? It's like opposite of what we had early in the day. And so the good thing about bear markets is valuations drop, startups have lower expectations, they raise less money, right? Because we've seen it's not necessarily a good thing when a company raises too much money.
Yeah, that's true.
Just a bunch of weird stuff can happen, right? So I'm trying to find this link. I was watching a video yesterday of a recent talk that Patrick gave, basically making his pitch for tZERO and what it is and what their plans are and the value. And he basically came up with this idea that I think we all agree on, which is all equities are going to be tokenized, period. And if that's true, which it probably is, means that there is a really, really big bucket of securities to be tokenized. So there's something around and what he did is he basically lined up all the exchanges and like public exchanges like the NASDAQ, ICE, London Stock Exchange, stuff like that, and basically found out that the value of exchanges is worth about 0.18% of the listed entity's market cap. So if you look at all the stocks that are on the NASDAQ and you say, what's the market cap of all those stocks, for example, it's so many trillions of dollars. And then that means that right now, the total market cap of the major stock exchanges is somewhere around 130 billion. And so if we tokenize all these, he was making an argument that there's somewhere around $900 billion worth of market cap potential in exchanges, and he was going for that, right? So that's his like kind of pie in the sky idea is, hey, if we listed all of the current and future securities, you know, there's a $1 trillion pie to be had, and they're going for that, right? So right now they're worth, call it $100 million. He's basically painting a picture for that upside, right? So now it's time for them to actually deliver and show us what they can do.
Makes sense. Yeah, I guess as far as like downside risk, my main concern with investing in something like tZERO would be network effect, because he's going to be competing with the big boys. I mean, we know that New York Stock Exchange and NASDAQ are both interested in crypto, blockchain, and tokenization. Yeah. And if they build a platform that can tokenize things, is his little rinky-dink platform really going to stand a chance, right? Because with the network effect, for someone to want to like STO on his platform, they have to look at various factors such as like liquidity. You know, someone going to want to sell shares in their company and then list it on a liquid exchange, right? With
so according to him, they have a very strategic advantage right now where they're one of the few alternative trading systems approved by the SEC. And they were, they were the first one to file an S1 and got OSTK security approved. So basically his claim is like, hey, we have a huge edge on all the other competition that's trying to get in the securities game or in the STO game. So we'll see, man. I mean, I do think that T0 is one of the potential contenders.
Yeah.
But I'm going to be really paying attention over the next 3 to 6 months. Like, they need to move fast. They don't have time to mess around and like, pull a Kraken where, the first however many years they were in business, their platform was total shit. If they do that, if they pull a game like that, somebody else is going to take over.
Yeah, no, absolutely. And, I do really like Patrick Byrne, as a CEO, and just as his philosophy and stuff. He has a lot of interesting information. I have listened to his talks before.
I agree. Yeah. I think he's a super smart dude. He's a little quirky, which makes him a great entrepreneur.
Yeah.
Super intelligent. He was an academic and then figured out like, hey, building a business is more fulfilling and fun than being a whatever he was, professor or whatever he did in academia. So I like that. He's smart. He's got a cool background. And he's not afraid to take risks. And
he was actually one of the major whistleblowers on naked short selling. He actually sued. Who was it he sued? He sued one of the banks or whatnot for naked short selling his stock into the company. And so he actually he's a little bit of a shit disturber on Wall Street, in relation to that. And I kind of respect that. That's one of the main reasons why he's really big into Bitcoin and blockchain. And I also think he issued out the first corporate bond. What was it, in 2015? The first overstock corporate bond on the Bitcoin blockchain. How much was it for? I think it's like 30 or 40 million. I can't quite remember. It was big news at the time. Now we've all forgotten it, but I wonder if he's still using a Bitcoin blockchain for that. But so it's kind of definitely cutting edge. And yeah, he was working. I remember him working on this T0 stuff, or at least trying to get into motion on building something in 2014. Right?
Yeah, so that's when I think they started.
Yeah, so he's certainly ahead of his time, which does show foresight and innovation as an entrepreneur to be that early with this before it became really popular.
Yeah.
So I think I'm seriously interested in taking a punt at T0. I did sign up to the exchange yesterday. I got to the part where I have to submit my documents and stuff. I always get a little cringy when I've got to do all that stuff. But and you said you had to send a letter. It didn't show me what was next. So what ended up happening was I got to upload your driver's license part, but didn't show me what the next part is. So you'd said the next part was like a letter from your CPA, from your accountant.
Yeah, I don't even remember exactly because I've been doing so much of it. My CPA is like, what the hell are you doing? Because, like CoinList, which is, associated with AngelList, like they kicked back like a few documents because they weren't worded perfectly. Like some of these, we need like not centralized, but we need like a secure, distributed, but single source verification, because as we've seen, like there are just so many issues with sending all this information everywhere. And then it's like certain companies require different things. And it's a hassle, man. It is a real pain in the butt.
Oh, absolutely. Absolutely. Like I know Civic was trying to do something. I don't know if they've succeeded or whatnot, but like someone needs to just create like one simple tokenized standard of like, you go to one place, you do your KYC, you get a token or something, and then maybe there have to be some other method of verification. And then when you sign up for exchanges, or maybe even you get an accredited investor token, or even just signing up for regular exchanges, that's all you got to submit is that bloody token. Because this whole, I'm just going to send pictures of my driver's license all over the internet, what could possibly go wrong? And I hope these fools like keep my data secure. Well, we know how well that they can't even keep their money secure.
Yeah.
Right? They're getting hacked left, right, and center. So just like the risk to reward, it's really put a bad taste in my mouth,
Yeah, and that's what I keep telling myself is like, hey, get in early on the security token stuff, because eventually, like a lot of these tokens will be opened up to the public. And there's different ways to raise where like you don't have to be an accredited investor for all of these. It's just like, I think all these exchanges when they launch are like, okay, let's keep it as simple as possible. Let's follow all the current regulations. And I think sometime either later this year or early next year, they'll start to give pushback and hopefully make some changes. So anyway, guys, I've got to run, but that's really what my main focus is. As soon as I get some tokens and I can do a video and kind of show you guys what I'm doing, we'll do that class hopefully next week. And then, in the meantime, I know we've got a lot of action in the stock market, and I'm watching, I've got my same alert set from 2 or 3 weeks ago in Bitcoin and just waiting for that to make a move. And the longer it consolidates, typically the bigger the move is once it does break out of that range. So, that's it for me, Rock.
All right. Sounds good, Chris. Yeah, we'll wrap it up there. If you have any questions that were unanswered, just hit us up in Discord and we can answer it in there. So thanks for coming to this week's market update, and have yourselves a great week, folks.
Thanks, guys. Talk soon.
Peace.